Yes, yes.
It's very important that you start implementing. Okay.
Okay.
So today I just want us to look at let's look at resistance and support.
Okay.
Resistance and support. So you need to be using the resistance and support with the candlestick pattern.
Okay.
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 So what do we mean when we say price is at a resistance or an instrument is at a resistance? Now, the best time frame I would recommend for resistance also is the daily time frame.
Okay.
Okay, daily time frame, weekly and monthly. As a day trader, you work with the daily time frame. As a swing trader, you work with the weekly time frame. As a position trader, you work with the monthly time frame. Okay. Now, when we say a level is a resistance level, it's a level where price starts dropping.
Okay.
A level where price starts dropping.
Okay.
When price hits a resistance level, price is expected to reverse from
Okay.
that level. Just like the room that you are in now, you have the ceiling and you have the floor, right? The
Yes.
floor is your support and the ceiling is your resistance level.
Mm-hmm.
Okay, so when you bounce a ball in that room, when it gets to the ceiling, it bounces back to the floor. When it gets to the floor, it bounces back to the ceiling.
Towards the
So
ceiling.
price, yes, so price moves from resistance to support, support to
Okay.
resistance. That's how price moves.
Okay.
Okay. So we identify a resistance on the chart. Okay. When a bearish candle closes after a bullish candle, when a bearish candle closes after a bullish candle, a resistance level is created or formed.
Okay.
You get that? When a
Yes.
bearish candle closes after a,
Foolish
a
candle.
bullish candle, yes, a resistance level is formed. A few minutes, let me.
Okay.
So let's identify, we're going to work with it. Okay, so you can see what we have here, right?
Yes.
We had this spinning candle, we had this
Mm-hmm.
doji. Okay, so
Okay.
at what point did the resistance form on this there? The resistance formed after this candlestick closed bearish.
Okay.
Okay, after this candlestick closed bearish. Now, this candlestick here, this candlestick closed at this point. This is the closing price of this candle. Now, this next candle, which was yesterday candle, Monday candle, was supposed to open at the close of last Friday candle. Are
Okay.
you with me? So this is
Yes.
the resistance level. This candlestick was supposed to open at this point. But you can see
Yes.
the opening price of yesterday candle is few pips below the closing price of Friday candle.
Like the candle. Yes.
So in this case, we'll say there's a gap. There's a gap
Mm-hmm.
in the market. Now, what is the reason for this gap? Now, when the your trading platform or your broker closes the platform on Friday, the forex market is still open,
Okay.
right? People still travel on Saturday. Okay,
Yes.
governments or presidents of the different nations can make policies that would affect or influence price action or influence the value of that country's currency. So when the market now open or when the broker now opens on Monday or Sunday night, most times there is always a gap because of the events that occurred during the weekend.
The weekend.
Do you get it? So
Yes.
most times when the market open on Sunday, most times you'll see gap. But on a
Okay.
normal market condition, the new candle was supposed to open at the closing price of the previous candle. The closing price of the
Yes.
previous candle and the opening price of the new candle was supposed to be the same.
The same. Yes.
Yes. Or on weekend, and that is the risk of carrying trade over the
Into the
weekend.
new.
Yes. Okay. So,
Okay.
for example, if you had an open trade to buy at this point, immediately the market opened, you would see negative because of this gap in the market.
Yes.
Or if you set your stop loss around this area, that means immediately the market open, your stop loss will be taken out.
Gone.
The trade
Yes.
will be closed. Yes. So that is the reason. That is why I hardly carry trade over the weekend. I hardly carry trade over the weekend. Okay. So,
Mm-hmm.
so this is our resistance on this instrument. This is our resistance. Are you with me? This is our
Yes.
resistance. This is what? Our resistance. Why is it a resistance? A bearish candle closed after a bullish candle. So this level is our resistance. And this is where price starts dropping.
Okay.
Can you see that?
Yes.
So this is also what? This level is called
A
what?
resistance. A
Resistance.
resistance.
Because this
Yeah.
is where price started dropping and a bearish candlestick closed after a bullish candle. So anytime
Candle.
a bearish candle closes after a bullish candle, a resistance level is created. I hope that
Okay.
is clear. A resistance
Yeah.
level is created. And at the resistance level, supply is higher than demand. At the resistance level, we have more sellers than buyers.
Yes.
Are you with me?
Yes, I
And
am.
so when you have more sellers than buyers, what will happen to price? Price is expected to
I've
drop because
dropped
supply
it.
will be higher than demand. Are you with me?
Yes, I am.
Okay. So anytime price gets to a resistance level, price is expected to retrace from that level or reverse from that level. But in some cases, price might break out from resistance level. Instead of respecting that resistance level, it could break out
Mhm.
from that resistance level. For example, when price gets to that resistance level, at that point, we expect the sell or supply to increase at that point. But if demand keeps increasing at that level, price could break out from that resistance.
Okay.
And when a resistance is broken, that resistance now becomes a support.
Mm. Okay.
Okay, like your ceiling now. Let's assume you're staying in the, let's say, first floor. Okay, your own ceiling, those in the second floor, your own ceiling is their own support.
Yes.
Do you get it? So when a
Yeah.
resistance is broken, that resistance becomes a support. Those in the down floor, your own support is their own resistance,
Mm-hmm.
right?
Yes.
So when a resistance is broken, that resistance becomes a support. Okay,
Yes.
so that's all you need to know about resistance. Then support is the opposite of resistance. When a bullish candle forms after a bearish candle, a
Which can
support.
do.
Yes. So this is a support. 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 That's where price starts going up. And at that support level, demand is higher than supply. We have
Yeah.
more buyers at the support level than sellers. So when demand is higher than uh, supply, we would expect price to go up. Okay.
Okay.
So
Yeah.
like what we have here now, we would identify this level as our resistance. If price pulls back, the market is currently trading at this price. If price pulls back to this resistance level, what do you think will happen? What do you think will
If,
happen?
mm,
If
now,
price pulls
can
back,
you,
if price
yes,
pulls back to this level, the market is currently trading at this price. If
this
price
price,
pulls
yes.
back, yes, if it pulls back to this level, what do you think will happen at this point?
So that is going to be the resistance.
Yes. What will happen? There will be a resistance at this point, right?
It's going to, yes. So
So we'd
it will
expect price
to drop to
to
fall.
drop, to drop. Why
Yeah.
would price drop? Why would price drop? It will drop because most traders, both the institution and the retail traders, assume that this price, that this instrument trading at this price is at a premium area, premium level. They see this level as an overbought area. So most retail traders will want to sell from that level because they see this level as an overbought area. Do you
Okay.
get it?
Yes.
So that is the reason that when price gets to this level, there's a high probability those who bought from this point, those who bought from this point and held the trade to this level, they would have made so much profit that at this point, they also want to sell
You
because they know
don't want
that
the
price
price
has
to
hit
beat them.
a
Yes.
resistance level. They would want to sell. So a lot of people are willing to sell at this point. That's the psychology.
Hmm.
Do you get it? That's the
Yeah.
psychology. At this point, a lot of people want to sell, thereby making the price to retrace from that level. But if at this point, because what you see as expensive, some other person might see it as cheap.
That's cheap. Yes.
That's why we don't say there is a high price, or when we say buy low and sell high, we don't mean that high that you are selling is what you think is you are satisfied with that level. That's why you are selling. But to some, that your high is still low to them.
Below to them.
Do you get it? So at this point, where you are thinking, or where many traders are thinking that this place is high, we want to sell, institutions might come in and decide to buy from this level.
Mm-hmm.
Do you get it? So
Yes.
there's also possibility for price to break out from this resistance level if there is more buying pressure at that resistance level. Are you
Okay.
getting me?
Yes.
So
Clearly.
what do you do when price gets to this level? You don't just jump in and start selling. You look out for
Selling.
the candlestick pattern that will form at that level.
Okay.
Do you get it? So if a shooting star candle forms at this level, there's a high probability that price would respect that resistance level, or an engulfing pattern forms, or a Marubozu forms, or hanging man forms. These are all bearish reversal pattern. If they form after price tests this resistance level, there's a high probability that price will respect that resistance level. And
Okay.
if price breaks out from that resistance level, we would expect more buys. Okay, we would expect more buys if price breaks out from that resistance level. Now, when price breaks out from that resistance level, how do you know that price has broken out from that resistance level? It means that the body of the candle closes above that resistance level.
Okay.
The
Yes.
body of the candle, when we say there's a breakout from a resistance, it means the body of that candle that closed above that close above that resistance, the body is above the resistance level.
Not
That
the
is when we
weak.
say not the weak,
Yeah.
not the weak. The body must close above the resistance level. Like what we have here, we had this support at this point. This was the support. This is a valid breakout. You
Yes.
see, it broke out. The body closed below the support level. You can see that there were several attempts at this point.
Mhm.
You can see price just tested the resistance, the support, sorry, tested it at this point, tested it at this point, and there was also an attempt to test it here before the breakout. You can see that. Now, a lot of people, like you see, we had an hammer here. I said when price gets to the, what's it called? the support level, and you see hammer, that's a bullish reversal pattern, right?
Yes.
So some want to jump in and start buying because this is a bullish reversal pattern, right? Now the rule is that when you see a bearish reversal pattern like this, what do you do?
You confirm that the next candle is bullish before
Bullish.
you buy.
If the next candle closed bearish, you can't buy. This also closed bearish, and this
Mm-hmm.
closed bullish. Most people want to buy from this point,
And stay
right?
between.
You want to buy,
Yes.
or you also need to consider the time that candlestick pattern formed. Remember, I said the best session is the London and the New York session.
Yes.
So you can see the time this pattern formed. What time is this? This was the first candle in Asian session. You can see the time. This was the first candle. You can see the time 0000.
That's midnight.
That's around 11 p.m. Nigerian time. 11 p.m. Nigerian time. This will run from 11 to 3 a.m. Nigerian time. So this was the first candle that formed in Asian session, which is not the right time to execute the trade. You can see that. So then the next candlestick broke out from that support. So this would have been a good entry to sell. This breakout would have been a good entry. And if you are selling from this point, the high of this candle will be your stop loss.
Mm-hmm.
Are you with me? The high of this candle
Yes.
would be your stop loss. So that is how to trade resistance and support. Now, after price breaks out from a support or resistance, after price breaks out from a support or resistance, most times, price will retest that support which has become a resistance before it continue with its bearish move. Do you get that?
Yes.
Now, after this candlestick broke out from this support, you know this support now has become a resistance. It has become the ceiling.
Resistance. Yes.
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 So after this breakout, most times price is expected to retest that broken support that has become a resistance before it
Mm-hmm.
continues selling, before price starts dropping. That alone is a strategy, break and retest strategy. So if you're a break and retest strategy, all you need to look out for is breakout from resistance or support. And after price breaks out from resistance or support, you wait for price to retest that broken level. Then you take your trade
Level,
from
yeah.
there. Yes, that's one strategy some trader use. Okay, so that could be your strategy.
But while you're waiting, if it did not test and it keeps going down, then you've lose on some money you should have entered.
Okay, for example, now, if I'm to take this trade after this breakout,
Yes.
everything in trading is probability. There is no guarantee
Yes.
price will pull
Yes.
back to this level. So let's say I want to risk, normally, let's say I will risk $50 on this trade. Since price has not retested this level and I insist on taking the trade, I can risk maybe
Mm-hmm.
$30,
Okay.
$30 at first. I'm left with $20. Then if price pulls
Mm-hmm.
back and retests this level, I'll use the remaining $20.
$20 going. Okay.
Yes. So,
Okay.
so price gets to a resistance or support level. Next thing you need to look out for is the candlestick pattern. A bullish or a bearish reversal pattern should form at this level before you execute your trade. You don't just say because price has hit a resistance level, you start selling. No. Candlestick pattern must form there, indicating that we have more sellers or we have more buyers. That is when you would execute your trade. If there is no bearish or bullish reversal pattern, don't execute the trade. Don't execute the trade. Now, this resistance and support level, we have what we call uh, strong resistance level, or sometimes they call them key levels. Strong resistance or strong support level, or you could call it key support level or key resistance level. Now, we say a support level or resistance level is key is that if that level has been used as resistance or support in the past.
Okay.
That support or resistance is a key support level. You can call it a strong support level. That means that level has been used at least 2 times in the past.
Times.
It has been
Okay.
acted as support at least 2 times in the past. Okay, so like what we have here, we had this, you can see what played out here. We had this support here. Can you see what I'm saying? We had this support here. What happened? Price pulled back to this support level, and you can see the reversal patterns that formed.
Then back again, yes.
You can see, so you would have executed your buy from this point. Now, this level now has become a key support level.
Level.
It has become a key support level. So we identify this support here too, right? So we have, this is your support zone now, right? This is your support zone. And what played out here? Price broke out from that zone, right? You can see price
Yes.
broke out from that zone and there was a retest. You can see the retest. After it broke
Yes.
out here,
Yes.
it retested that zone and what? It sold. You can see that. After it sold here, it also went back again at this point, retested that zone. You can see. And what? Sold. You can see that.
Yes.
For my examples. So when a level has been used as support or resistance in the past, say that is a key support or resistance level. We had this resistance at this point. You can see price dropped, retraced back. See the bearish reversal pattern that formed here. This is an hanging man. The next candlestick closed bearish. This would have been a sell. Also at this point, retested that resistance level. You can see it retested that resistance level and you see what happened. Price dropped. And at this point, you can see price now broke out. This resistance here, this resistance now became what? This resistance
Support.
now became a support after this candlestick broke out.
From it, yes.
Yeah, it's now became a support. So you can see this move here. This move here was to come and retest. But it didn't get there. Okay, it didn't get there. Actually attempted. I think the reason it didn't get to this level is because of this resistance we have here. I think you can see. Can you see this resistance here, which became a support
Yes.
also? You can see that could be the reason it didn't pull back to this area. So in this case, you would have waited for this engulfing pattern to form before you execute your trade. You would have executed from this point, set your stop loss using the low of this candle. This would have given you at least 1 to 3 risk reward. Let's calculate it because if you had executed from this point, your stop loss, this is 140, and this is about you had held the trade, though this will take like 2-3 weeks.
Then you've gone into the weekend.
Well, yeah. So this is about 500 pips.
Wow.
This is like 1 to 3 risk reward. 1 to 3 risk reward. Okay. We're on the daily time frame. So you can catch this kind of move. This one move giving you 500 pips in 2-3 weeks. It's worth it. It's okay.
Wow.
Because you don't have to be stressing yourself opening trade every day. Like I said, every day is a trading day. Yeah. Yeah. Let me look for more examples here. We have here. You see this resistance at this point. Can you see this?
Yes.
This resistance, okay? Now what happened? Price pulled back into that resistance. This is like a breakout retest. came back to that resistance, and you can see how price dropped from that resistance zone.
Okay.
We had one here too. See this resistance? Okay, you see this resistance?
Mm-hmm.
Price dropped and retraced back. Even at this point, I think we had a support here. We had a support. Okay, you can see this level. This was a resistance, right?
Yes.
This was a resistance, and price broke out from that resistance. It became what? A support, right? It became a support. And what happened? Price went up, came back. You can see to test that support level, give us an engulfing pattern, time to buy. And what happened there also, it came back again at this point. Yeah, you see this? It came back
Mm-hmm.
at this point. The goal was to come and fill this, to test this support. This breakout was to entice lots of retail traders to sell. Because like I told you, when you see a breakout like this, you look for what? For sell. So most retail traders will jump in and start
Start
selling.
selling.
Yes, this is just to deceive retail traders that now we have a breakout, let's sell. But the institutions, they want to buy.
Okay.
Get it? So after the formation of this candle, so 7th of March, it should be, okay, 8th, 7th of, this is 7th of March. So you can see the next candle that formed. So even if you had entered this sell here and you see this pattern form, then you should exit. This is a spinning bottom indicating change in trend from bearish to bullish. Or you could patiently wait for price to close above this zone. Then you take your buy. If you didn't buy from this point, this would have been a good entry for buy. See this. We had this resistance. We had this resistance at this point. Price came, tested that resistance level, sold, traced back, tested that zone, sold. You see that? At this point also, we had a resistance here. Price dropped, retraced back. You can see, gave us a shooting star. And what happened? Price crashed. Also,
Crashed.
attempt here also, you can see pull back again to come and test this. So this resistance, there was a strong rejection from there. Yeah, also we had this resistance here. We had this resistance. Price dropped, pulled back, gave us a bearish reversal pattern, and it dropped.
Okay.
Here we had this support. So if we had identified this support as the formation of this candle here, wait for price to pull back, wait for price to pull back, give us a bullish reversal pattern, then we'll buy from that. Here also we had several resistance here that price respected. See, we had this resistance, price pulled back, sold, and pulled back again at this point, sold from that point. I hope you're following.
Yes, I am.
So my examples. One here too. can see. Let's pull back to this level. Strong rejection from that level. Take out here.
Mhm.
So any question on this? Any question?
No, I don't have any question for now. But as you said, when I start doing the demo, of course,
Yeah,
I'll have lots of questions.
yeah. So I think that will be all for
Okay.
today's session. If there are no questions.
Yeah. So the next class we might look at that Fibonacci of
We should look at what? Fibonacci.
no, maybe next class.
We should look at which
Fibonacci.
Fibonacci. Fibonacci. I
I'm
think
just
we'll still look at market structure.
okay.
And we'll look at market structure before Fibonacci.
No worries. You know how you should go. I'm just reminding you so we don't forget.
Yeah, we'll look at market structure. There's this strategy I was supposed to even, I think I don't know, maybe I should teach you that tonight. Uh, should I teach you that tonight? Our next class will be on Thursday, right? Hello, babe, babe.
Let
Mr.
me
Wale
see
is
my card.
around. Hello, can you hear me?
Yeah, let me look at my calendar, please. Let me
Thursday.
see. Thursday.
Is Thursday convenient?
Yes, we can do Thursday, but it's going to be late. Like maybe can we do 8 p.m.? No, 9 p.m. your time.
No problem.
Yeah,
Okay.
right. Yeah.
Thursday, 9 p.m.
Yes, 9 p.m.
Okay.
All
Okay.
right, no worries, boss.
So just remind me, I would look at the strategy, the average strategy. Just remind me, average
Okay.
strategy. I would look at that before we look at structure. Then we'll look at
Average.
partnership.
Okay, all right.
You need to learn structure before you.
I know even mind. Anyone you think is best to put first.
It's okay. It's okay.
Yeah.
Have a wonderful night.
All right, thank you very much.
You're welcome.
Yes.